Today's guest on that note is Cris Burnham from StorageMart, which fascinating story, Cris, because I mean, I think this is the largest privately owned storage company in the world.
Yes.
And you're based out of Missouri, and we're so happy to have you here because it's just a fascinating story and a unique asset type.
Yeah.
So
yeah, and we won't do a disservice by telling that story. So we'd love to hear it from you. So what I'd really love to hear is how you got into this and kind of the early beginnings of StorageMart. You mentioned to us off camera that this started with G1, the first generation. So please.
Yeah. So growing up, my father was a single family home builder. And in the wintertime in Missouri, we'd take our vacation somewhere warm. We went to Brownsville, Texas one year. I think I was 11 years old. And it rained the whole time. And what do you do with a bunch of kids when it's raining? Well, in my family, you looked at real estate. And Dad drove by this long row of skinny buildings multiple times. Couldn't figure out what it was. Stopped in, visited with the guy. The guy finally said, "Look, buddy, I can tell you're thinking about getting in this business. Give me $10. I'll give you my lease and I'll tell you how I did it." And Dad came back north to Missouri and built his first storage facility, talked his local banker into doing it. The banker said, "Look, Gordon, you're crazy. It'll never work, but you've always paid your bills in the past." So we got the first loan and went on from there.
I have two questions. One, why are you vacationing in Brownsville? Is my first question. I'm a Texas guy, so no disrespect against Brownsville. And two, I guess your dad was already very well versed in real estate. What was he doing beforehand?
Yeah, so a little bit of everything, but had mostly done single family home building and built a few apartments and some things like that. This was in 73, and then ultimately opened up the first building in 74. And I say Brownsville, I should have said Padre Island. Okay. So close.
Yeah, close enough. Yeah.
And Dad was a serial entrepreneur. He was in about 35 different businesses. Lost money in all of them, except for two: the self-storage business and the apartment business.
Wow.
And self-storage turned out to be probably the best thing that he had done. And he built up a considerable portfolio, sold it in 86. And that's when I joined the business. I had worked as a commodities trader for a couple of years out of school. Wanted to join the family firm, came back and started working with my two brothers and my sister.
So were you based in New York?
No, we're based in Missouri.
So the whole time
in Missouri.
Okay.
The thought of doing business in New York City was crazy to me.
Yeah.
And I got to tell you, I didn't even know what an investment banker was, what we found was that it was an interesting niche. It's always been kind of considered the junkyard dog of real estate, maybe a sister step above mobile home parks. And the rest of the world laughed at us for about 30 years. And they're not laughing at us so much anymore because we've become really a food group, a major food group for a lot of institutional investors. Whereas, usually we were lumped in kind of the other category, right? So my brother Mike and I got our start. Our local attorney did a lot of estate planning for physicians. And we would go to the local hospital and they'd put us in an exam room. And in between cases, physicians would come in and would pitch them LP deals. And that's how we syndicated our first major expansion. Then, and I'll make this quick, but
no, it's fascinating.
Then built up enough of a portfolio along with a lot of RTC assets because we got in the REO business, managing those, and we're able to cobble together enough of a portfolio to go public in 1994. So we were actually the second storage REIT to go public, actually before Public Storage became public. And those were good days. And we raised a whopping raise of $100 million in 94, grew it to about a 650 market cap in 99. And you guys are too young to remember a thing called the Russian ruble crisis. Okay. But it was a black swan event. Liquidity dried up. And Public Storage came along and put a bear hug on our company. And they ultimately put us into an auction position, and they were the only ones with a checkbook at the time. So they bought us cheap. And on a Friday, I had 500 employees, and on a Monday, I had 10. And I was related to 3 of them.
Wow.
But we had a good reputation. And we went to Wall Street and did one of the first private equity raises in self-storage in 1999 with Warburg Pincus. And we had this groundbreaking concept of building multi-story, shiny new boxes in gateway cities like Miami, Chicago, and New York. And we proceeded with a development strategy for the next 7 years. Of course, the great thing about private equity is when you get your deal, but ultimately those folks want their money back. So we had to recap. So in 2007, we brought in a high net worth individual from Missouri who's been with us ever since. And he's been a phenomenal partner for us. And along the ways, we continue to expand. Probably the more notable deals we've done over that time. In 2009, we started doing some work in Canada. And every time we got close to getting a deal done in Canada, a REIT out of Toronto swept in and overpaid for the asset. And the more we looked at it, we tried to figure out what do those guys know that we don't. And what we decided was they knew how to raise money, but they didn't know how to run properties. And so we started buying their stock and ultimately performed a bear hug on them and took them private in a hostile takeover. And we got a major Canadian platform. At that time, we got 70 stores in Canada, which has been a phenomenal diversification for us. And over the years, we've been opportunistic, and sometimes we were able to punch above our weight. In 21, we did a big recap and brought in two more groups. And that put us in a position so that when Manhattan Mini Storage came available, we had our dry powder ready to go. And when kind of a marquee asset came on the market, we were able to compete, and ultimately we were able to take over that business. So now we run two brands, StorageMart and Manhattan Mini Storage.
So there's so much to unpack here.
Yeah. The one thing that I want to ask is, when you were just getting into the business and, you were describing your dad driving down that row of buildings that he couldn't figure out. Were there some like golden nuggets that he shared with you on what was his original thesis as to why he thought this would work? Because it was very early days, not a lot of reference for the strategy.
Yeah. So at that time, most self-storage had kind of the genesis was around military bases, mostly in Texas. And that's where it was close to a military bases where Dad saw this. And he got to thinking about, folks that move a lot. And our hometown is where the University of Missouri is. We have lots of college students, and it's a highly transient market, lots of people moving in, moving out. And he thought that made sense. And so came in and built the first facility. And then after that, kind of pursued an expansion strategy of Sunbelt markets where they didn't have basements, close to military bases, or universities. And that was kind of the early thought. And also he had a partner that liked to quail hunt in South Carolina, and he liked to play golf down on the Gulf Coast. So that had something to do with it as well. So we did a lot of real strategic things like that.
I love it. I think there's so much to what you just said.
There's so much, right? I mean, I'm probably thinking a lot of what we're thinking the same thing. I mean, for starters, Sunbelt, right? Way ahead of the curve there. And secondly, just the asset type itself. I mean, people weren't really thinking about self-storage then, like you mentioned, like they are today. And to have the foresight to know that this is something that's not going anywhere is just amazing.
Well, listen, when I was a teenager, I spent my summers cleaning out apartments after bad tenants moved out. And I came to realize what a great thing self-storage is because, RTI after a tenant moves out is we sweep the floor and change the light bulb, as opposed to what you have to do in multifamily or in the office business. And that flexibility and ease of operations just struck us as something that we could scale.
Yeah. Well, I think we want to talk about why self-storage has become what it is today. But before we get into that, I think it'd be interesting just to go through the evolution of maybe just how you have capitalized these deals over time. You started off, you mentioned, as a syndication with retail investors going to doctors. And And then now you have some, I believe some institutional equity partners that you brought on.
Mm-hmm.
Can you talk to us about the evolution from going to private capital syndications and working your way up the chain to some of these more institutional groups? And it'd be great just to talk more about how those institutional relationships formed.
Sure. If you're building a real estate company, access to capital and the right kind of capital is absolutely crucial. Because, certainly going the private equity route, you have to be careful because you're basically going to have a going out of business sale every 5 to 7 years.
Mm-hmm.
And if you're building a business that requires scale, that just doesn't fit. And that's what has really evolved and what's become different about self-storage, say over the last 20 years, is suddenly scale is very, very significant as all of the operating procedures and technology that we're using has become more sophisticated and more expensive. It used to be, if you could see Walmart and smell McDonald's, you probably had a pretty good storage location. And if you built it,
I don't know what that says about
you'd probably do okay.
People.
But a lot of folks made the mistake of, locating a self-storage property on a piece of extra land that they had was tucked away, that, they couldn't figure out what to do with. And what we've learned over the years is that it's still very much a location-driven business. But going back to your capital question, what we certainly learned over the years, more than anything else, is the value of having patient long-term capital. And we have ourselves done relatively hot money deals in the past and have lived to regret it. We just determined that we were going to be a little bit different and we were going to do our best to build a company that could do some very interesting things in our sector. We were able to find a high net worth investor out of Missouri, and he's been an extremely great partner for us, and shares the view of having a very long-term alignment.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Greysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at greysteel.com. So, I know you're not using names, but, for a quick Wikipedia search, you can usually find some of these things.
Sure.
Your high net worth investor you're talking about, I know is a pretty prolific person in his own right, and pretty well known in the sports world.
That's right. That's right.
Is there a
nothing gets past this?
Right.
Master Googler over here. Is there a backstory on your relationship with him? And
actually, there is. And it's obviously Stan Kroenke. And Stan's been a great friend and a great partner to us. He's actually from Central Missouri. For years, we shared a family attorney. We didn't really know each other very well. We knew of each other. And when we were in the middle of recapping our company, our attorney said, "Look, you really ought to talk to Stan about this." And my brother and I met Stan at a local Panera. And we did a deal on the back of a napkin. And that served us very well. And, together, we've built a $7.5 billion company, since 2007.
Wow. It's like a Warren Buffett type story, if you will, because, it's not flashy. It's middle America. What is it about these pockets like Missouri where you find some incredible wealth, but under the radar wealth?
Well, we're flyover country, right?
Yeah.
So, you could almost say in some respects, it's like a different part of the world.
Mm-hmm.
But I suspect that those folks are out there everywhere.
Yeah.
Right. You just have to look beneath the surface, and there's always good stories. But we've been very fortunate, and having a partner like Stan who believed in us and was a great backer has made a lot of difference. And together, we've made a lot of money.
Yeah.
So it's been very good for us.
Wow.
Yeah. That's incredible.
There's so much to unpack here that
Jack's giddy with excitement.
Right.
So, come on.
So you expand with Stan, and tell us about a couple of these. I think it'd be nice to talk about the Manhattan Mini Storage acquisition, because from what I recall, I think it's one of the largest self-storage acquisitions ever.
Outside of the public M&A that's going on, it is the largest transaction that's been done. So we bought the company for $3.2 billion in 2021.
Okay.
And it is a phenomenal group of assets and extremely high rents and very large, which is unusual in the storage industry. We have one asset on 62nd Street that brings in as much money as our 35 stores in Milwaukee and Des Moines combined.
Unreal.
So there's a lot of scale there, a fair amount of barriers to entry, which is something we like about Manhattan, although we are concerned about all the C-class office in Manhattan. And there's rarely a week that goes by where we don't get a call from someone saying, hey, I got this building. Not understanding all of the ins and outs of what it really takes to make a successful facility. And Manhattan is a relatively thin market. I mean, at the end of the day, there's only 1.7 million people here. You build 3 or 4 large storage facilities, and that can really upset the supply balance for a while. But we're fortunate that the city's coming back. I was coming off the subway by our offices on Varick a couple of weeks ago. And I was just struck. It was a really cold morning, but how busy the streets were and just how vibrant it was. And I was just kind of, just really struck me for the first time how Manhattan has recovered in terms of just activity.
Did you get spooked when the headlines were coming out during COVID saying everyone's fleeing to Miami?
Absolutely.
Did that influence any Miami acquisitions?
No. We were like the pig in the python, right? So for a company of our size to double overnight by acquiring Manhattan Mini, that was all the acquisitions we could handle for a while. But it was a little bit eerie to, get on, Fifth Avenue and be the only car.
Crazy.
It was kind of like science fiction, Omega Man or something like that. If you remember that old movie.
So how did your thesis, did it change at all when you guys acquired Manhattan Mini Storage? Do you see that it's different than, your other locations throughout the country?
At the end of the day, it's a customer service business. And what we brought to Manhattan Mini was modern technology. The whole idea, we knew there was an opportunity in Manhattan when I slipped into the city and I rented a couple of units, which is what we will typically do. Secret shopping and act like a customer, and sometimes you actually rent one. And, it took about 45 minutes from start to finish to complete the rental transaction. And I was scratching my head, how on earth do New Yorkers put up with that?
How do they put up with a lot of things?
Yeah, to wait 45 minutes to give somebody your money, that's crazy. Our goal is if you come into one of our locations in Manhattan, we're going to get you, in your unit in about 5 minutes. Documents signed, money changes hands, unit selected, or even better yet, you'll get it pre-leased online, and then you just show up and put your lock on the unit. Those are the kinds of technology, prop tech things that we brought to the fold, along with a lot of more sophisticated revenue management, algorithms, things of that nature that are meaningful. So, while Manhattan Mini was a pretty sophisticated operation, there were still some value add components. And we put the entire company on a diet. There was a lot of downsizing that needed to be done as well.
You're mentioning prop tech and just management solutions in many ways. What are you guys? I mean, do you offer third party management?
We do
as well.
We do, and in fact, we've been expanding the Manhattan brand. So we're in Brooklyn and New Jersey now.
Okay.
I think we've got some properties coming on in Long Island and up around Westchester as well. Those will be third-party managed stores because there is a lot of brand equity and recognition of the Manhattan mini name, so we want to capitalize on that. But elsewhere throughout the U.S. and Canada, we do third-party management at StorageMart as well.
Okay.
And the industry is transforming from being kind of a mom and pop, build it and they will come, to a very sophisticated digital business. If you don't have a great digital platform, you're just not going to do as well as you should. Whether it's customer acquisition, upper funnel stuff, we talk about doing all kinds of out of the box things like, should we be doing a self-storage podcast?
Oh, great. Another podcast. Just what we need.
Are you guys available? Again, build the name, the recognition, all of those things go into those black box algorithms that are created that help you show up on page one of search. And those are things that, we've been intently focused on for the last 10 years. And it takes a lot of money. 10, 12, 15 years ago, I made one advertising decision a year, which was single page or double page in the Yellow Pages. Right. Now, we have transformed from being a real estate investment with a simple advertising strategy to an incredibly complex digital strategy where we're spending millions of dollars annually on Google search, et cetera. And then also starting to ask the question, what comes next?
Yeah.
Who's going to disrupt that page one real
People
estate?
think that the real estate industry is tough until they encounter what the real game is. Right?
Yeah. Well, I kind of guess that there's a concern potentially about a disruptor like an Airbnb, but doing self-storage or no?
The self-storage business is littered with the bones of folks that have raised VC money to disrupt this business.
Yes.
If you remember a company called Clutter.
I do.
The subways were jammed with Clutter ads a few years ago. And that company is in the boneyard now. The only assets that they had that made any sense at all was the 3 or 4 stores, actual storage facilities they bought in Brooklyn because they had hot money and they didn't know what to do with it. The fact is, it's a convenience-driven business. And that's why the location makes a difference. And you basically, what the consumer has told us and local businesses time and time again is they want something that the location makes sense to them personally. We are an intense local sub-market business. And whatever that amoeba shape is for your trade area around your facility, the fact is no one's going to drive past 3 extra spaces to come to a public storage or 3 public storages to come to a StorageMart. It's going to be proximity, ease of use are going to be the things that drive it. Now, if you're an expat and you're going overseas for 2 years and you want to have one of those pods delivered and throw all your stuff in it, fine, that works. That's a niche play. But for the local plumber who needs a unit, or the landscaper, or someone that's a lifestyle user that just, puts their Christmas stuff in it, that's got to be local. It's got to be self-service. It's got to be quick. And that's why I think our business will be very, very hard to disrupt.
I've seen firsthand how the right platform can make all the difference for advisors and their clients. With decades of collective experience in investment sales, debt placement, and equity placement services, Greysteel has built a culture where collaboration, relationships, and excellence power results. Backed by concierge-level infrastructure, proprietary technology, and an entrepreneurial mindset, the firm enables professionals like myself and our team to deliver tailored solutions, precision-driven pricing strategies, AI-enhanced insights, and exceptional value at every stage. Discover how top professionals are scaling their business and continually unlocking new opportunities for their clients at graysteel.com. I think it'd be nice to get into the psychology more of self-storage, but maybe before we get into that, adaptive reuse is a buzzword that's used a lot. So you were mentioning earlier about all this empty office space. So what does happen? Is there a play for self-storage conversions from these office?
Absolutely, if it's the right building. And we've been doing it for 30 years. I mean, I took a 9-story hotel in New Orleans in 1991 and converted it into self-storage. And you can imagine a hotel room. You walk in and you got the bathroom, put a sheet of plywood on top of the tub, rip out the sink. That's one unit, and chop the rest of the thing up. And that's the way we did in the old days. A modern conversion today, though, really has to have a couple of different things. First off, it has to have excellent ingress and egress, truck loading, all of those kinds of things. You have to have proper floor loading, which is a big issue, particularly in a reuse situation. At least 150 pounds per square foot, which is a lot, basically an industrial floor loading.
What would a typical office be?
Probably 80, something like that. You can imagine, I think I've been told it's the equivalent of having a 6-foot high stack of paper across your entire floor plate.
Interesting. Wow.
So that's important. In fact, at a conversion that we did one time, we actually had a cave-in.
Wow.
Where we had 2 big units next to each other. In one unit, they stored chopsticks. Gross after gross of chopsticks, boxes of chopsticks.
Okay. Got to put it somewhere. And
in the next door unit, they stored granite countertops. And so you can imagine all that weight.
Wow.
Right there in the center. And we actually had a cave-in. Ruptured a fire main.
Chopsticks. Because of the chopsticks.
Well, there's the chopsticks and the granite countertops both. I think it would have been fine with either of them. So floor loading is important.
And so you have to reinforce often? Is that...
Sometimes you can, sometimes you can't.
Okay.
Depends on how it works. Elevator capacity is probably one of the biggest limiting factors in an older building. If you can't get a good sized freight elevator in it, you're going to be in trouble. Imagine putting a couch in an elevator from the 1960s.
Forget about it.
Right.
So in a case like New York, I mean, so many of these buildings are pre-war. They're 1920s, 1930s buildings. To me, it sounds, and I'm making just a judgment on the cover of the book here. You almost have to gut the elevators and know that you're going to do the structure. That's the full service play.
Exactly.
What about in some suburban markets? Do you think that there's a play for suburban office where it's these 1 to 2 story buildings?
Yeah, it's always
a lot
possible.
of them are newer, 80s,
probably
70s vintage.
Single store is probably the easiest. We've actually done some of that ourselves. Probably a bigger play has been big box locations, Kmart's, that sort of thing.
I saw today Party City let go of 250 leases.
That sort of thing.
Yeah.
The problem with a lot of the retail reuse is if you're in a CAM situation. So a lot of shopping centers, it's hard to get a fee simple. It's hard to get out from underneath a CAM. Obviously, we don't consume a lot of CAM type services. So, making sure that all works is usually one of the biggest roadblocks to doing a retail deal, unless you control the entire center.
Yeah.
Well, I would think if you're a big block, no different than if, a bad example right now, but when Kohl's was the leader, right? They really dictate how that goes, and they're kind of the center of attraction, if you would be, right?
Exactly.
So they get a sweetheart deal.
That's right. And the guys that are in the inline space, they don't want to self-storage as the anchor, right?
Yeah.
Yeah.
Shocker.
Honestly, I'd be surprised because I feel like so if you're a clothing store, if you are that Kohl's or Kmart or whatever else. I got to get a better example. This is horrible.
I think it's a good example.
But you're attracting, one group of people who need something. I mean, with storage, in theory, you have so many tenants You would think that they'd be a pretty good anchor.
But you probably have metrics on how often these tenants are visiting, right?
Yeah, and the fact is the average person just doesn't visit their stuff that often.
They lock it and forget it, huh?
That's exactly right. And those are the folks we like best.
I'm sure.
So
put that credit card number in and
right.
move on. And so do you have an idea on what the average visit is per?
Sure. I think we haven't looked at that in a while, but we've done various studies in the past. I think it's about the average tenant probably every 3 weeks.
That's more than I thought.
But what that really means is
shorter terms.
So we'll have last mile distribution, and they're in there 20 times a day. And then we'll have the homeowner, he's in there once every 6 months. So I mean, I think that kind of you got to look at the outliers and figure out what that really looks like.
So adaptive reuse, you're also doing ground up development too? And those are mostly, I imagine, suburban markets, more Sunbelt type?
Not always. In downtown Miami, in the Brickell area, we took a 7,000 square foot lot and built a 10-story building on it.
And that's hot. That's like the place to be.
And
you might have some folks renting and actually living in those units.
Well, we have that happen in a lot of places. That's something we really look out for.
Okay.
So, so there's a management issue behind this as well. And you got to realize our tenure is 30 days. So, it's not necessarily a panacea. We actually operate probably a little more like a hotel than we do, say, an industrial complex. And we have to be in the market selling every day because we have vacates every day. So we have to manage the churn. That's also certainly a factor in our business.
Seems very tech driven.
It is now. For a long time, it wasn't. I think it's being increasingly that way. And we're trying to, listen, you can't go into a McDonald's today and go up to the cashier and order something, right? You've got to go through the menu board and it's all that self-service stuff. I think that's we're taking a page out of that book. How do we right size our human footprint at every location? And how do we get it so the customer feels like they're getting their needs met quickly? In terms of evolution of facility design, we went through a period of time where we were building absolute Taj Mahals with fabulous retail offices on the inside, only to eventually discover that at the end of the day, our customers really don't want to be there. That's going to a self-storage facility to run a unit is probably about the last thing on anyone's list of what they really want to do. And what we've discovered is they want something that's clean and comfortable and very fast. How do I transact and get my needs taken care of so I can get the heck out of here? And so, we're going to smaller office footprints. We used to have lots of retail products, things like that. So all of that has been largely automated or outsourced, that sort of thing.
I'm going to pivot the conversation very quickly because we did a bit of a disservice to our listeners. We mentioned the acquisition of Manhattan Mini Storage, but we never touched on the famous billboards. Right?
Can we? I don't think our listeners know what that is if they've never visited New York.
So for our New York City elitist listeners, the ones who follow me, as you drive down south on the FDR, there's this, and I think on the north side as well, but I always see them coming south. I'm coming from Upper East Side. So Manhattan Mini Storage, for as long as I've been in New York, has the most infamous billboards with sometimes the most out-of-pocket, just crazy things that you could say that will actually make you pay attention to a storage facility. Please give us some insight on how that came to be, how that's part of the brand.
Sure.
I'd love to hear more about it.
I wish that I could take credit for it. But the preceding owner, they had a significant billboard empire here in New York City. But over the years, various city administrations cracked down more and more on billboards that were not permitted for third-party use to be leased out. And many of their billboards turned out to be like that. So they were like, what do we do with this kind of accessory use signage? And they came up with the idea of having a very in-your-face, kind of cheeky, New York-centric ad campaigns. And over the years, they've done some really interesting, fun things. Some of them very much in your face and controversial. Some of them, just funny. And we certainly thought, wow, that image has been built up and it's kind of iconic. And that's something that we really focused on continuing.
By the way, it has to be, I think it's the largest billboard in New York. I could be wrong.
It's one of them.
Yeah. Times Square might battle, but it's huge.
Wow, really?
Yeah. So during the campaign this year, we had a picture, a cartoon of Biden and Trump on the billboard. And, the caption was, don't put old stuff in the White House, put it in storage.
So good.
Instead.
Yeah, so good.
Different things like that. We try to have fun with it.
That's great.
Yeah.
I love it.
They've always given me some of the biggest laughs. And, I feel like kind of a giddy kid. Like as I'm driving down, I always want to see if it changes to something new. So.
Yeah, it's such a distinct brand, Manhattan Mini Storage. So it's an interesting acquisition and juxtaposition.
And I don't know if you could talk about this. We'll cut it out if anything. But you mentioned the coffee book.
Sure.
Yeah. I would love to see like a chapter in the coffee book that's just all the ads over time.
Right. Oh, what's even more interesting are the outtakes. The ads that they didn't use.
Yes, I would kill for.
Some of those were pretty
This is the
controversial.
prior owners.
The prior owners and ourselves. We've got a few outtakes
I have to see that. That would be...
Yeah.
I might frame that like each one individually and put it up in my house.
Because each one was a piece of artwork that either you guys or the prior owner had.
That's right.
Yeah.
So, we had a lot of fun during the election, though, when we were putting Trump up. The first version, and it's a cartoon figure, I was like, no, he's not orange enough. And they came back with another version. Like, no, not orange enough. They came back and I finally said, look, I want Oompa Loompa.
Yeah.
And that's what we ended up
It was funny. We were watching Trump the other day in the office, actually. It was on the TV. And I'm noticing that it's getting more and more out of control. Like it's getting to the point now where he almost just gave up. And there's just patches that are clearly not orange and some that are, and no one cares anymore. Like it's just we just kind of accepted it. Have you noticed that?
It is interesting. His hair isn't as red though. It looks like it's kind of going blondie.
A little bit, yeah.
They say that
no one cares.
The job ages you.
I mean, no one cares anymore. It's like we just accept it, which is funny. All right, what's the weirdest thing you've ever discovered in a storage unit?
Oh my God.
And by the way, if you did come across someone's living quarters, we can bifurcate those.
No,
because we can talk about that separately.
Goodness. Where do I begin?
Yeah, no pressure. I'm sure there's a million things. Yeah.
Probably the strangest thing is kind of a tragic story, but I was in Chicago once, and it was actually at a competitor store I was shopping at. And they were cleaning out a unit, and it was cold, and they were carrying out all of these little pet carriers. Okay.
Oh, jeez.
And I was like, well, what's going on? He says, well, we had a tenant here who had a problem with cats. And I was like, oh gosh, what do you mean? He said, well, there's dead cats in all of these carriers.
Oh my gosh.
And it was like, you mean she left cats in there? I said, no, you don't understand. She was picking up the dead ones.
Oh gosh.
On the street and putting them in carriers and putting them in her unit.
Wow.
And apparently it got warm on a couple of days and it started to smell pretty
That's
bad.
pretty weird.
That's a weird one.
That's very macabre, actually.
Yeah. But somehow...
But there's been some funny stuff, too.
Yeah, I was going to say, I can't not expect that either. But let's hear a funny one.
Yeah, so, there's always the unexpected adult, apparatuses that are always...
as one would expect.
Kind of entertaining. There was an entire unit of kinky boots one time.
Okay.
Which I recall, which apparently are pretty expensive. So I think we actually sold those in an auction. I'm not sure who bought them, but that's the beauty of our business.
These auctions,
if you don't pay your bill, that's what happens.
So there's TV shows on these auctions, these storage auctions. How does that work? I mean, is that actually a profit center in a way for you guys?
No, it's a delinquency control.
Okay.
And we go to every possible length to not sell somebody's stuff because first off, it's a dead loss for us. second, it's kind of tragic for the person.
Sure.
So,
are different states more difficult
Sure,
for evictions?
There's different jurisdictions and different, things you have to do between legal postings and
I imagine New York's
notifications.
incredibly difficult compared to other states. Or
New York, California, New Jersey, they're all a
you would
little
expect.
prickly.
Yeah.
Yeah, but not terribly different from places like Kansas or Louisiana.
Okay. So we had kinky boots and dead cats. Is there anything else that's worth noting?
Gosh, nothing that comes to mind.
Yeah.
But I'll tell you what. Next something that's really weird, I'll give you a call.
Please.
I have to
Could write
ask,
a book.
how often, if ever, in your portfolio have you guys found someone living in the quarters? And the reason I ask is I think a year ago there was a very famous viral video or series of videos of a guy who I'm sure you're familiar with, but the guy was documenting his life in a storage unit. And all I could think is, if you're getting away with it, maybe don't put it up
don't
online.
advertise it.
Yeah, well, listen, you don't know exactly what's a put-up job or not, as well. I would tell you that in any well-run storage facility, any overnight guests are going to be found pretty quickly.
Yeah.
We got access control monitors, and we know when people go in and when they go out, and when we see people go in and not go out for 12 or 18 hours, that's a pretty good tip.
Yeah.
And our staff is pretty conscientious about that.
And you have cameras everywhere now.
Yeah, exactly.
And is there AI sort of watchers that will monitor?
Not yet.
Okay.
We are looking at applying AI to all sorts of aspects in our business, but not from a security standpoint. So we're not, we haven't brought in anything from, the PRC to do facial recognition and
Not
social
yet.
credit. But,
I mean, imagine that
maybe we can. I don't know. But
there's just so many eyes that can watch these cameras, and you go to any of these storage facilities and you see a camera on every corner in every floor. It's pretty heavily surveillance.
Yeah. The news is important, but if you're a busy real estate professional like me, you don't have time to skim through dozens of dry and ad-filled media outlets each day. That's why I read the CRE Daily. It's a free email newsletter that cuts through the clutter and delivers concise, witty commentary on the latest trends and transactions in commercial real estate. If you're a commercial real estate professional, you owe it to yourself to try it out and stay on top of what's happening in the industry. It's only 5 minutes a day. Visit credaily.com to sign up for free.
What is it about self-storage and the mindset, particularly the American mindset, of wanting to store your crap?
I feel like you're kind of leading the witness on this one.
Well, listen, Americans love their shit, guys.
Yeah.
If I guess I can say that.
Oh yeah.
The
more the better.
We are a little bit of a nation of pack rats.
Mm-hmm.
I don't know if your folks still have your fourth grade math work in a box somewhere waiting to give to you, but that could be in a storage unit somewhere. Certainly all of grandmother's possessions. I will tell you, I think my wife and I have, 4 sets of various grandparents' china in boxes that I know we will never open or use.
But you can't throw it out.
Well, we can't throw it out.
Throw that out.
So there's all of those kinds of things. But really, probably a third of the business is small business people, entrepreneurs, that sort of thing. We have a thriving small business community that uses self-storage. And it's a great incubator, for someone that's had the business they've been running out of their garage or their basement, and their next step up is maybe a storage unit before they go to a flex space in a industrial complex or something like that. Transition is another big piece of our business. Probably 15-20% of our business comes from people moving. That's one of the reasons why the storage business has really been off for the last 24 months. And if you look at, say, the performance of the storage REITs in terms of organic or same-store growth numbers, everybody's in the doldrums. This has not been a fun time to be in the storage business over the last, say, 10 quarters. And until we see single-family home sales rebound, it's going to continue to be a little bit anemic.
Yeah.
And then finally, the lifestyle users. And those are the folks that have just figured out that it's convenient to have a storage facility to, do whatever. I mean, my wife has 5.
I was going to ask, do you guys use it yourself? Yeah.
She
gets a discount.
Yeah, she does get a discount. I'm one of those guys that I throw everything away.
Yeah.
I'm the same way.
Same.
Right.
Less clutter,
we do a quarterly audit in my house, which how much my wife
Grace loves that.
She loves that, but we cleaned the closets out so well this last time. I'm actually proud.
We're just a culture of collecting plastic shit.
Yeah.
It's not flattering. Do you see this becoming more popular overseas?
It is, and we actually have a sizable portfolio in the UK.
Right.
And we've been there since 2016. And it's certainly growing. I would say the most successful markets overseas, Canada certainly is very similar to the States. Australia also has a vibrant self-storage market. The UK as well, and it's been over in the UK for about 30 years. But the fact is, the UK, most of Europe, folks simply are not as mobile as they are in the US. They don't move as often. And it's not infrequent. You'll find somebody who was born in Norwich and lives in Norwich and dies in Norwich. And that's just the way it's always been. And, the thought that you could go 50 miles and have a completely different accent, in England just tells you that folks don't move as much.
Yeah.
That's changing. In Europe, the continent, it's a relatively new concept. There are several companies that are doing very well with it, but still it's a niche play. There's not much consumer awareness. And I have doubts it will ever reach American proportion.
Mm-hmm.
But if it got to, say, 10% of what we do in the States, that would give the current footprint in the EU scope to grow 10x.
And just to summarize, it's predominantly because they don't move as much and they don't own or they don't buy as much.
They don't have as much stuff.
Which,
that's right.
Between those two segments, that's what, like 70% of your business?
Yeah, that's right. And but what tops us up here is the lifestyle user. Okay, that really hasn't come forth in, say, the UK. In the UK, you've got people who are moving and you have business. Mm-hmm. You really don't have someone who rents a storage unit intending to keep it forever, to put their extra stuff in. That's starting to change a little bit. But the worldwide phenomenon is that due to building costs, square footages are shrinking. Yeah. Closets are getting smaller, garages are getting smaller, bedrooms are getting smaller.
That's like a New York love story.
Yeah, there you go. Exactly. What's the biggest use for an oven in Manhattan? It's probably to store your shoes in.
Yeah.
I actually used to see there's an office building that got converted to residential downtown in Fidei. And as I would tour with the landlord, like we've opened up ovens and found people's pillows and stuff inside.
Jeez.
And the stickers on the inside. So it's never been used.
Unreal.
Yeah, that's right.
It's a really good point that you make. Yeah.
In fact, we have a billboard up on the West Side Highway over by the 44th Street by the Intrepid that has a big picture of a pair of shoes on fire inside an oven, and it says that a storage unit will never catch your shoes on fire.
Yeah, that's really funny.
So, that's just part of it.
Tell us about you mentioned REIT performance, same store growth slowing some.
Right.
Tell us where you see the market right now. Are there good opportunities? Mm-hmm. Has it become a lot more competitive?
Yeah. And what are some of the biggest challenges?
Yeah,
sure. The biggest challenge in the storage business is supply growth. It just isn't that hard to build a storage facility. And when money's available, as an industry, we are guilty of overbuilding. It's always been that case. People love to develop and build. And, there's plenty of activity. During COVID and post-COVID, we had a period of time that was just the golden age of storage because we had all kinds of people moving in and nobody was moving out. Mm-hmm. And we suddenly saw same-store growth numbers in the high teens, and we were starting to act like a tech sector. And, boy, it was off to the races. Money was cheap. Mm-hmm. In fact, money was free.
Yeah.
And the combination between high same-store growth numbers and free money led to a development boom in self-storage. Those facilities that are being delivered today that started, say, 2 or 3 years ago are really feeling the brunt. And folks that thought that they were going to get, say, a 24 or 30-month lease up are now looking at a 60 to 72-month lease up. They were paying 3-4% for construction money. Now they're paying 9%. Suddenly, that's getting really painful. So we're in a no supply growth mode now, which means basically a year and a half from now, 2 years from now, operation numbers will look really good because we still see organic demand continuing to grow. So the supply situation is probably the biggest problem. Atlanta, for instance, went from probably being one of the best storage markets to probably the worst. And we've seen rents absolutely collapse.
Is that because of the downtown? And
no, it's just because the general growth, the job formation, everything was happening in Atlanta for about a 7 or 8 year period. And all of a sudden, Atlanta's overbuilt in most sectors, and it's just not growing quite as much as it has. And self-storage is really taking it hard as far as that goes. The other challenges, facing us besides the supply growth, is demand is off.
Yeah.
We're at a all-time low of single-family transactions. When people move, they need storage. And we actually think that there's a high correlation between single-family transactions and self-storage rentals. We think it's about a 0.6 correlation. So we need to see velocity of homes being moved. Apartment lease renewals, they're an all-time high.
Yeah.
That's bad for us. Meanwhile, home equity loans, all-time low. People are not pulling money out to do their DIY projects. Lowe's has said, their business is off, et cetera. Well, every DIY project that doesn't happen is less demand for self-storage.
It's interesting how you're following other sectors so much because there's such a correlation with self-storage and really everything else.
Yeah, no, absolutely. Probably the thing that is going well for us right now is overall GDP growth. It means the business community is healthy. The slump during the GFC, what really happened to the storage business then was a lot of our tenants were small contractors. Everybody that had a pickup truck and a couple of hammers was running a storage unit, and they were a contractor. And GFC wiped out how many thousands of those guys? They all had a storage unit, and they still haven't recovered the amount of contractors that are out there from that.
Wow.
Right now, we're seeing it from the residential transition business. Now, that being said, if you look at what the public companies have been producing from a same-store growth basis over the last kind of 8 quarters, it's been flat to slightly negative. I mean, I'm going to say from negative 3% same-store NOI growth to maybe positive 0.5%. Given that that's the performance during a supply glut and a demand valley, that's kind of a testament to how great a business this is. So that in the worst of times, we're flat. That ain't too bad.
Yeah.
So that's probably one of the more attractive things about our
That is
business.
such a phenomenal observation.
I have to ask, do you guys see, a culture change in the U.S.? To your point, so many less people are moving right now. Home prices are so expensive. Financing's crazy expensive. It is really difficult for first-time home buyers right now. Between that and I guess on the counterpoint, the downsizing of units helps your business. But is there any other major tide change in the U.S. right now that impacts the long-term vision of your company? Like, for instance, do you guys go out and start acquiring moving companies? I mean, how do you see your vision shaping?
Yeah. For us, you have to have the discipline to stay with what you're good at. We're not good at logistics, and that's really what the moving business is. There's other folks out there that are far better, more sophisticated. whether it's 2 men in a truck to, United Van Lines or, Iron Mountain or, all of those kinds of folks. So that basically has no interest for us. Instead, I think you got to look at a couple of fundamentals. The penetration of American households using self-storage has steadily climbed. About 10 years ago, we were at about, probably 7.5%, 8% of American households. Today, we're at approximately 11. So we are gaining penetration. Where that, peaks out is hard to say, but we are still seeing it. We're seeing job growth, household formation are still factors that are out there. And frankly, immigration has also helped. Actually, our business in Canada has done very well, but it's an immigration phenomenon in Canada where they have allowed good immigration to occur, and it's really driving their economy. If we can figure out how to do good immigration in the U.S., that would be a factor for economic growth as well.
Can we talk about, this is no secret. Everyone's talking about interest rates and will continue to for the foreseeable future. How are you looking at leverage these days?
I think like any real estate company in the U.S., we're looking at delevering our balance sheet. I think that, having exposure is something you have to be very careful about. I'm fortunate that I have very well-heeled partners that helps us. But I think that, going forward, a balance sheet that's no more than 50% debt, even on a private company, is probably going to be more apropos than, say, the mid-60s, where it's been. Every deal's a little bit different. I'll tell you, in the old days, we did deals at 110% leverage and made them work. So we're comfortable using leverage. But it's pretty volatile out there, and you've got to have some deep pockets if you're going to do that.
Yeah, and just in terms of yield and returns, what are your equity partners looking for? What type of cap rates are you looking at right now on deals? Well,
I think that there's a big disconnect between buy and sell. In our industry, as there are in a lot of others. A lot of owners or would-be sellers just have not come into terms with the fact that cap rates have got to be decompressing. Debt just costs too much. Historically, we've seen a spread over the 10-year, about 200 basis points. That had put a cap rate at about a 6.5. I think that's probably between 6.5 and a 7 is where the buy side is. And I think on the sell side, it's still kind of mid-5s. So as a result, we're just not seeing a lot of transactions, not a lot of sales activity occurring, in the U.S. There's still always the death, divorce, dissolution of partnership, that occurs. But I think most folks today are not sellers by choice. There are some sellers by necessity. And I think that would be really interesting, depending on how long we poke along at these demand levels. There are a lot of merchant builders that went out and beefed up some pretty significant programs in that post-COVID surge that, if their properties have not seasoned the way they forecasted, there's going to be some refi risk and some either equity injections that are going to need to be made or maybe some sales transactions.
And what does that lease up term look like for these merchant builders? How long does it take to get a property stabilized?
For the last 20 years, we've always insisted it's about 60 months. During COVID, there were countless stories of folks leasing up in 18 months. And a lot of the newbies in the business looked at that and said, "Wow, I found a new way to dig a gold mine. How many of these can I build?" And the reality is, lease up is a tricky thing.
And you guys will help with lease ups on the third party management side. Got it.
But you said it's 60 months, 60.
That's right.
And these people looked at 18-month lease ups and didn't think that there was a big something in the middle of how do we get from 60 to 18?
What's worse than that, we've seen average rental rates drop about 25%.
Wow.
So it's a two-edged sword there. And so it's been very painful for a lot of folks.
So there'll be some opportunities there.
Yeah, I
is
think
what
so.
you're saying. Yeah,
I think so.
Let's we don't have that much more time left. Let's get your takeaway on where the industry is headed over the next few years.
Sure. I think that consolidation will continue to occur in our business. The fact is things like AI and your advertising budgets, your rent increase algorithms, all of those things take a lot of sophistication and a lot of investment. And to invest like that, you have to have scale. So we're considerably smaller than the public companies, but we're still going to run a $10 million advertising budget. And we're still going to be putting, a couple $1 million into AI. And not to mention all the revenue management strategies that we do. Having the ability to invest like that is going to be, I think, a key differentiator going forward on performance. And a lot of the independents just can't do that, and the mom and pops can't even start.
Yeah.
So there's still room for the mom and pops in this business, providing they're well located in a pretty high barrier to entry market. Then you've probably got a pretty good setup, but it's getting increasingly difficult. So I think that that's certainly going to be a factor. I think that you'll continue to see self-storage get built. I think you'll see use diversification occur where more and more businesses will look to us as a flexible alternative. So what that means is the average storage unit is likely to get larger. Unit mix is a big factor in our business. We go from a 25 square foot closet up to maybe a 600 square foot commercial unit. And getting the mix right is critical. Frequently, because the small units rent for very high dollars per foot, someone that doesn't know this business very well might come in and say, look, I'm going to build all small units. And that looks great on a pro forma, and maybe your banker likes it. But the fact of the matter is you can't rent them up. So in any given trade area, it's a wedding cake of demand, right? And so you have to make sure you get the right blend of units to serve the trade area. Otherwise, that 60-month rent-up might even be more painful. So those are some of the things you have to kind of consider.
Got it. Makes sense. Makes sense. Well, Cris, thanks so much for hopping on. This was fascinating.
Yeah, this has been a great conversation.
Appreciate the opportunity.
Yeah,
of course.
Awesome. It was fun. Thank you.